This is ABC News legal analyst Royal Oakes welcoming you to Hinshaw and Culbertson's Insurance Law Program, where we discuss insurance and reinsurance issues of interest to industry professionals. Here's your host, the co-chair of Hinshaw's Global Insurance Services Practice Group, Scott Seaman.
Welcome to Hinshaw Insurance Law. On May 19, 2022, Florida Governor Ron DeSantis signed into law multiple property insurance bills that came out of a special session of lawmakers to address Florida's property insurance crisis. The purpose was to stabilize the insurance market, which has seen consumers impacted by skyrocketing insurance costs, and to curb litigation abuses by unscrupulous contractors and others. On balance, the legislation should be helpful, but it certainly is not a complete solution. One of the laws creates a $2 billion insurance pool that allows Florida insurance companies to tap into the pool for their two greatest loss events in a given year, up to 90% of losses above a retention. To update us on the other important components of the new Florida law, we are joined by Daniel Schatz, a partner in Hinshaw's Miami office who has extensive experience in construction defect insurance coverage litigation. Dan, thank you for joining us. Let's begin by discussing some of the provisions that relate to attorney's fees and litigation. What are the important changes relating to attorney's fees?
Thanks, Scott. I'd say the biggest change is probably, and now there's a prohibition on awards in favor of assignees of insureds. So the general rule is and has been that each party is responsible for its own attorney's fees in a dispute, unless there is a contract or a statute that provides otherwise. And one such statute is Florida Statute 627428, which provides for one-way fee shifting in favor of an insured and against an insurance company in lawsuits over insurance claims. And that potential right to attorney's fees has been assignable by an insured to another party, such as a contractor or a mediation company or someone doing work on the insured's behalf on their property. And that assignment is known as an assignment of benefits, or an AOB for short. So many have believed that this sort of assignment has led to abuse because it creates an incentive for attorneys and contractors to potentially perform unnecessary work, to inflate invoices, to target insurance companies and file unnecessary lawsuits, all with the leverage of attorney's fees. So there's now additional statutory language that states that in a suit arising out of a residential or commercial property insurance policy, the right to attorney's fees may not be transferred, assigned, or acquired in any other manner by anyone other than a named or omnibus insured. And so a named or omnibus insured is going to refer to the insured under the policy and typically will not refer to a assignee. So this change is a good start because it removes that significant incentive for attorneys and contractors to target insurance claims or file unnecessary lawsuits. But, of course, that change is going to not do anything to mitigate against unnecessary suits that are filed by insureds themselves.
And then fee shifting statutes are generally a one-way street that works against insurers and in favor of policyholders. But under the new Florida legislation, are there any circumstances now that an insurer can recover attorney's fees?
Sure. One way an insurer could have and still can recoup its own fees is through what's known as a proposal for settlement, which is not unique to the insurance context. But yes, there is a new addition to the Florida statutes. It's Florida Statute 627-70152 subsection 8. And that now allows for an award of attorney's fees in favor of an insurer if the insurer secures a dismissal of an insured lawsuit because the insurer has failed to comply with the notice of intent to initiate litigation. So under the current law, an insured has to give 10 days notice before it can file suit. And if it fails to do that, and the insurer successfully gets the lawsuit dismissed for that failure, the insurer can recoup its fees as well.
One of the big abuses has been contingency fee multipliers. What changes have been made to the law with respect to contingent fee multipliers?
Yeah, absolutely. So now there's a presumption against contingency fee multipliers. And just by way of background and for context, what we're talking about here is attorneys traditionally bill their clients by the hour, not just in the insurance context, but across the board in most litigation matters. Insureds, if they want to bring a suit against their insurer, may or may not have sufficient resources to pay an attorney hourly. So attorneys will often take these insurance dispute cases on a contingency basis, which means that they won't recover any fees unless and until the client insured prevails and obtains funds. And in order to encourage attorneys to take that risk and represent clients on contingency, courts have often been willing to apply a multiplier to augment the amount of attorney's fees that are awarded. So rather than award an attorney his fees strictly based on the usual measure of value, which would be hours billed at a reasonable hourly rate, which is referred to as the lodestar method, courts have often applied a multiplication factor of typically 1 to 2.5 times if there is a contingency relationship. But now the statutory language has been added to statute 627-701528, that same statute, and it now creates a quote unquote strong presumption that a lodestar fee is sufficient and reasonable. So the statute now says that that presumption may be rebutted and a multiplier applied only in a rare and exceptional circumstance with evidence that competent counsel could not be retained in a reasonable manner. So it's too early to tell what those rare and exceptional circumstances are, but the important point here is that burden of showing that it's a rare and exceptional circumstance is going to lie with the insured who is seeking a fee multiplier. This may have a general downstream effect on premiums and the cost of insurance in general, maybe not, but it's a very significant change in the law.
Yeah, absolutely. And we wouldn't have a complete discussion about first-party property insurance without talking about bad faith. What changes have been made with respect to Florida bad faith law, Dan?
Yeah, the biggest change there is appraisal awards can no longer serve as the predicate for a bad faith lawsuit. So the Florida statutes allow insureds to file bad faith claims against their insurers for first party claims. But a precondition to doing so is a determination of coverage and damages. So it must be established that some sort of property damage was covered in a certain amount. And a number of Florida courts have held over the years that an appraisal award is a sufficient determination of coverage and damages. So if an insurer pays a claim and the insurer disputes the amount of payment and it goes to appraisal and it's determined that the claim was underpaid, courts have found that that underpayment is enough to allow a bad faith lawsuit to be lodged. But the Florida legislature has now enacted statute 624-1551, which is going to require a finding of actual breach before suing for bad faith. So bad faith lawsuits can no longer be filed based on a favorable appraisal award, which is significant.
Dan, most of the statute is aimed at cutting back litigation abuses and cutting insurance costs. But there are a couple provisions that may be cut both ways, and some of which may be not favorable for insurers. I know there have been some changes made to claims handling requirements. Could you go over some of those key changes?
Sure. So the general rule, I mean, there's a few, but as it currently stands, an insurer must typically begin an investigation of a claim within 14 days of receiving a proof of loss statement and has to pay or deny that claim within 90 days. But now there's an added requirement that at the 45-day mark, after 45 days of receiving a proof of loss, the insurer must conduct a physical inspection of the premises, unless it's a hurricane claim. That doesn't apply to hurricane claims. Another change is that while an insurer is not required to create an estimate of loss, an insurer is required to notify the insured within 7 days after assigning a claim to an adjuster that the insured has the right to request a detailed estimate of loss from the insurer if the insurer generates one. And then the insurer has to send the insured that estimate, if requested, within the latter of 7 days after the request or 7 days after the estimate is completed. Another big change is that when paying or denying claims, insurers must now explain any discrepancy in payment from that detailed estimate that the insured is entitled to receive. So the insurer has to identify the facts or the law or the policy provisions that may warrant a partial denial or payment reduction, any change from the estimate. So it's a lot more transparency for insureds. This may have the potential to mitigate litigation. It could cut both ways. You know, again, it's pretty early, but it's a lot more onerous requirements for insurers for sure.
Roofs are something, I guess, people tend to take for granted until they start to leak or they blow off. And roofs have received a lot of attention in the legislation. What are some of the changes that are directed at roofs and roofers?
There's a few. I guess the first one is, with approval of the Florida Office of Insurance Regulation, insurers are now entitled to charge an additional deductible for roof losses. But there's a lot of red tape and specific disclosures and criteria that apply if that extra deductible is applied. So if the roof deductible applies, no other deductible can apply. A roof deductible cannot apply to certain losses, such as a hurricane loss. The deductible has to be a certain amount. It cannot exceed the lesser of 2% of the policy's property damage limit and 50% of the cost to replace the roof. As long as proof of payment of the deductible is shown, the roof deductible can only be applied if a claim is adjusted on a replacement cost value, which is the cost to actually repair or replace the roof without deducting for depreciation.
And I take it that the approval from the Florida Office of Insurance Regulations required for any of those premiums?
I'm sorry, what was the question, Scott?
That the approval of the Florida Office of Insurance Regulation is required for any deductibles?
Yes, correct.
Okay. And there were some other changes I know you wanted to talk about.
Yeah, there's now limitations have been placed on insurers' ability to refuse to issue or renew homeowners policies that insure roofs. So after July 1st of this year, a carrier cannot refuse to issue or renew a homeowner's policy insuring a roof that is less than 15 years old solely because of the age of the roof. And if the roof is at least 15 years old, the insurer must allow a homeowner to have a roof inspection performed by an authorized inspector at the insured's own expense as a condition for issuing or renewing. And then if that inspection shows that there is 5 or more years of useful life left in the roof, then the insurer cannot deny to issue coverage or renew coverage based on age alone. There's also amendments to a statute prohibiting advertisements regarding someone that's trying to contract to do work on roofs. So contractors who want to encourage someone to make an insurance claim for roof damage, in any advertisement regarding that must have certain statements now. I think it's 12-point font and pretty clearly state that 1, the insured is going to be responsible for the policy deductible applicable to any roofs. 2, that waiving or offering a rebate for the policy deductible is punishable as a felony. 3, that it's a felony to intentionally file a claim with false, incomplete, or misleading information. Another change is there's now additional or relaxed requirements for roofing system replacements. So currently the Florida Building Code requires that if more than 25% of a roofing system is repaired, replaced, or recovered, then the entire roofing system must be brought up to code to comply with the Florida Building Code as it exists at the time of the repair. And there will now be an exception to that rule to provide that as long as the roofing system complies with the 2007 Florida Building Code or any subsequent edition, then only the portion of the roofing system that is going to be undergoing repair, replacement, or recovery must be brought up to date. And that's helpful because roof repairs are not cheap, so this will be a significant cost savings.
And Dan, as you look overall at the legislation, how effective do you think it will be in reducing the cost of insurance and cutting back on some of the litigation abuses that insurers have been subject to?
I'm kind of a pessimist. I think it's a good start, and I think there may be a delay and a backlog. I think there's other factors, the cost of insurance, housing market costs. There's a lot of other factors that are affecting litigation. I don't think any legislation that has been implemented is going to really curb abusive tactics by insureds. I mean, the assignee and assignee of benefit lawsuits may see significant improvement. So I think it's a great start, but I think there's a long way to go.
A lot more to be done.
Yeah.
Dan Schatz, thank you for providing us with an outstanding overview of these changes to Florida law that impact first-party insurance. Please feel free to reach out to Dan at Hinshaw's Miami office if you have any questions. We thank you for joining us on Hinshaw Insurance Law, and we look forward to seeing you soon.
The information on our insurance law program is provided for general information purposes only. Nothing stated on the program constitutes legal advice or creates an attorney-client relationship. You should consult directly with an attorney of your choosing if you'd like to obtain any advice with respect to any claim, case, or matter. Any views expressed are those of the guests and are not necessarily the views of Hinshaw Culbertson or any of its clients. For information on past and upcoming programs, visit the Insurance and Reinsurance page on www.hinshawlaw.com and click on Multimedia.